Welcome to this week's ASX edition of Trade the Trend, a weekly video discussing where the stock market is heading. This video is going to focus on the ASX 200. I've also got an update for you on some big developments in the gold market, so make sure you stick around for that. I'll leave a link to my video on the S&P 500 in the description section below. And as always, this is general commentary and doesn't take your personal situation into account. With all of that said, let's get over to our first chart. So we've got the ASX 200 up on the screen, and this has really been a whipsawing 2 weeks, with the ASX 200 moving 4.5% thereabouts in either direction. And the initial rally is really interesting. So this initial rally that we had off the September low was looking quite encouraging. It was shaping up nicely, and it presented the possibility for the market then to track sideways, form a bit more of a base and consolidate, and then have a go at testing this big resistance band at between 7,100 and 7,200. But of course, that's not what we got. Rather than some consolidation, we got a swift move lower when that US inflation data came out, and the market really has, in the last few days, erased all of those gains that had been put in place. And the volatility that we're seeing, it really highlights the need for caution. Highlights the need for caution in this current environment. And with the ASX 200 now back down here beneath these moving averages, so I've got the 50 and the 100-day moving averages overlaying the chart. With price now below those moving averages, they're now in that position of vulnerability. So I think we need to be prepared for downside surprises. Doesn't mean they're going to happen, but we do need to be prepared for that possibility, because that's when that sort of stuff typically happens, when the market is below moving averages. For me, what that means is that I have no leverage in my portfolio and I have a high cash position. Still got exposure to the market because we don't know that a decline is imminent, and we just don't know. So it's about managing risk, managing possibilities. So do have exposure to the market in the event that a rally surprises people, but should the market roll over, the damage it does to my portfolio is going to be, it's going to be managed. It's going to be less severe than someone who's going all in. So let's jump over to a 4-hourly chart. Just have look at a little bit more detail. So what we can do on this, just finding some support that the market may be able to hinge off it currently. And if we just run that across, we see we've got a support comes in around 6,700. So that picks up some activity through here in June, picks up the high in July, the low in September. Now here we are. So it's a bit of a key point for what I think happens in the market over the next, well, it probably sets the course, sets the tone for the weeks ahead. Can the market hold here and bounce, or do we get a break and a probable retest of this June low? So let's go back over to the daily chart. And I think with the ASX 200, I think it really needs to, as I was saying, it really needs to hold its ground around this support. And of course, the risk here is that we do get a break and the market does start to roll over and re-engage this sell cycle that we had in place during the what's this from the April high. We don't want that sell cycle re-engaging, because then it does open the possibility of new lows and looking towards 6,200. On the positive side, it's been interesting to have a look at the small caps. So let's just jump over to them now. So this is a ASX small caps, or all small ordinaries index. And what's been positive here is that it's been holding up relatively well. So you look at the strength and the size of the advance, and then you look at the pullback, and the pullback at this point at least looks corrective. It looks a corrective pullback this strong rally that we had. And you can put some Fibonacci's on that, and when you put the Fibonacci retracements on, it's only pulled back about 50% of the rally. So you look at that in isolation, you say this chart still looks encouraging. Of course, you can't look at it completely in isolation because it's going to be heavily influenced by other things that are going on. But it is a slight positive to see that performing reasonably well. But like the ASX 200 and the US markets generally, we're below the moving averages, the 150-day moving averages. Price is below there. So I believe that does increase downside risk, whilst the price action is in this sector of the chart. I think the play here is to give relatively strong stocks the benefit of the doubt. So that's what I've done with my portfolio. I've got stocks which are performing reasonably well to quite well with some of them. Some stocks are actually doing well in this environment and this time. They're the stocks I'm holding on to, but at the same time, I'm quick to exit stocks that are trending lower and hitting my exit points. So I'm not holding on for things, hoping things to get a better bounce to get out. I'm pretty quick to cut things at the moment. Now, it's look, if you're getting some value from this, please hit that like button. It really helps me immensely if you do that. And also leave a short comment. Just, hey, thanks for the video. It tells YouTube you're watching, you're engaging, and then YouTube shows other people. And if you can leave maybe just hit that subscribe button as well. Or these are all really good signals for YouTube. Then YouTube shows people my videos, and hopefully they help. Hopefully they're helping you. If they're helping you, hopefully they can help other people. So tell YouTube by doing those things to send my videos out there. And also come over to my Motion Trader website and check it out. See what the stuff I'm offering over there. Will be some things that help you, particularly during this part now of the cycle where it's just so uncertain and there's just so much doubt and fear about what's going to happen next. So let's finish up with a quick look on gold, because there's been things on the move in gold this week. So here's a gold chart. And now gold is trading now, it's right down on this key support zone at around 1680. It is testing right there at as I'm filming. By the time you watch this, maybe it's bounced, maybe it's fallen through. But nonetheless, this is a really important level. It's been a key support for gold for around 2.5 years now. So it goes all the way back to around February, March 2020. Now we had a test of this support in July, and we got a strong rebound off there. But what we've had now is that prices that rally failed, and gold has now fallen back right back down to this support. And I've got to say, it looks vulnerable. It looks so vulnerable here. We're below the moving averages. Again, I've got the 100 and the 50-day moving averages. Prices are below it. We've had a sharp decline over the last couple of days. It really does look like we're going to test the other side of this support and see what happens. It's and it could be. Look, I think a break here is you've got to say is going to be negative for gold. I don't think now's the time to buy some gold. I think it's a time to, if you've got gold, well, you've got to think what position it's playing in your portfolio and how you want to manage it. We've been in this big trading range since the 2020 high. It's a big range which gold has been bounded in, and now it looks like we might be breaking out of that range to the downside. My view had been through here that we're actually getting ready, forming a base to break to the top side. But this is the thing with markets. Markets don't do what we think they're going to do or what we want they're going to do. It's a case of that we've got to analyze the price action, and we've got to adjust our views rather than waiting for the market to adopt what we think. It works the other way around. So let's go to the weekly chart on this. It gives a different perspective. So look, my view had been this was a big uptrend. This was a sideways consolidation, and then from there you get a rally. But look, you can't argue with the price action. The price action is what it is, and at the moment, that's potentially a big negative. Now, I wanted to highlight some key areas from previous years, just to give you an idea of what can happen when gold breaks out of a range. So what I've done here, I've found a couple of areas which are similar to now. So the first one is back here in 2011. You can see gold had had a big rally. It had gone sideways for, I think that was around 12 months, had a big support base. Once that support broke, that set the stage or set the momentum in action for gold for the next several years, really. Gold went into a significant decline. Then again, during this period here, this is the opposite situation where gold was now starting to recover. Went into a big sideways range over a couple of years. The resistance band was at the top. Once gold broke above that resistance, it had a significant rally, and that set the momentum for the next year or so. Now here we are. What's going to happen? I don't know. I don't know which way this is going to go. It may not follow the analog from these previous times either. It could be a false break below and come back up, but I don't want to be betting on that. Should we get the breakdown? We've just got to be aware. We've got to be aware that when these levels break, they can lead to unpleasant things for people who want to own gold. So let's just wait and see, but be aware, be cautious, and I think watch this space closely. So let's leave it there for this week. Hopefully that's been interesting. Hopefully it's been helpful. I know it's a lot of upheaval going on in the market now, a lot of uncertainty. So come back next week. Let's see if we can analyze that price action a bit more and start to maybe get some firmer direction from the price action. So thanks for joining me. It's been great speaking to you. Till next week. Bye for now.